Forex Focus brought to you by IG, taking a look forward at the Jackson Hole Symposium, where Fed Chair Powell is due to speak, and what it could mean for a number of different markets, but starting out with interest rates and forex, which are really kind of the first tier movers on an event like this. Fed Chair Powell is due to speak on Friday, the Jackson Hole Symposium that brings together a bunch of global central bankers. We'll be talking about structural shifts in the global economy, which a lot of times they can set a theme that is kind of irrelevant, and then Fed Chair Powell or another major central banker comes out and people want them to talk about stuff that's completely different. But this global economy theme is actually exceedingly relevant here, because very seldom do we find ourselves in such a divergent interest rate policy backdrop, whereby, U.S. rates 5.5% and potentially climbing, that we'll get to in a second. Japanese rates still negative. China, that we'll get to in a second, lowering interest rates. The global economy really seeing some interesting signs here. And then you have in the background there dollar versus yen back above 145 in recent trade. And you'll remember that last year when it hit 150, that was multi-decade highs in dollar appreciating over yen. Now, aside from some of that global speak, you're also probably going to get at least some allusion to or direct talk to where Fed Chair Powell thinks interest rates are going. And this is going to affect, not only bond markets and forex markets, but also stock markets. They seem to be in a very wait and see mode to see if the Fed is going to go higher than the current interest rate at 5.5%. Currently, 42% chance, getting closer and closer to 50-50 here, 42% chance of another hike in 2023. And those odds were in July, 27%. And now you're seeing there at the rightmost column, 5% chance that they get up to 6% interest rates, which, wasn't really in the cards a couple of months ago. But U.S. rates moving a little bit higher as inflation fears resurfacing. And that'll be really interesting to see Fed Chair Powell's take on that, and see if he does do some direct speak to China as well. As you can see here, another form of diverging pieces, which is the S&P 500, still holding on to 15% gains year to date. And the Chinese large stock equivalent down more than 10% year to date. In 2015, central bankers here in the U.S. did allude to often, this spillover effect of Chinese economic fear. And it was only for a brief period, but it definitely drove U.S. stocks lower. With, you'll remember, BABA was moving a lot lower in that stretch, and other Chinese stocks. And those similar stocks have seen a lot of bearishness over the course of the last few months. So we'll see if, China, a large trade partner with the U.S., and also a large, used to be a lot larger owner of U.S. debt. What does Fed Chair Powell think about that? Is that part of the structural shifts to the global economy theme that they'll be talking on? As you see, similar story to the Japanese yen there, the Chinese yuan moving towards its historical lows. Now we have less data here at IG around this currency, but you can see this is a US dollar relative to the Chinese yuan, USD CNH, back above 730, the high for this market. In the data that IG has here, going back to 2015, the high is about 735. So very close to that historical high, similar to the Japanese yen. And, this is potentially problematic for China because they already have a currency that's depreciated. They already have interest rates that they've been moving lower to historical lows for the last several years. And those are, tools for a central bank like the People's Bank of China to use to get an economy going. And so if those tools are diminishing, and the hangover effect from the pandemic is still driving Chinese economic data lower and lower, it's not been able to respark or pick up like the U.S. economy has. It could be worse for China in the future. Now, also, you will notice that the chart shows that 735 was a bit of an inflection point, and China, both its currency and its stock market, did bounce back in the later part of 2022 and the start of this year. So maybe this is an inflection point to jumpstart the Chinese economy. Either way, hearing what Fed Chair Powell has to say about China and the potential for spillover fear and problems for the U.S. economy will be quite interesting. Outside of that global economy piece there, you would have to imagine some commentary on inflation. That is obviously the number one item that central banks look to keep in line is the 2% inflation target that keeps the economy, moving and growing, but not necessarily going too crazy here. And Fed Chair Powell recently has had his eye on core inflation, which you have your eyes on right in front of you. And any kind of indication that he gives, and it could be just, one line, one phrase as to whether or not he sees inflation risk growing or diminishing, that could be, given, the historical trends, what we've seen recently, inflation risk up, stock market fear up, and stock market price action potentially lower, and also coinciding with that U.S. dollar moving higher, U.S. interest rates moving higher to fight this inflation fear that Powell could potentially speak on. Now, if he thinks that we've got inflation, under control, the inflation risk isn't as high as they thought previously, then you might see the reverse of that, which is, stock market bullishness, U.S. dollar giving away some ground, and U.S. interest rates not necessarily having to be that much higher to fight that high inflation. So commentary on that will be really interesting as well from Jackson Hole, as you see pretty direct correlations recently between the stock market and U.S. dollar. The U.S. dollar has been a little bit of a fear gauge. U.S. dollar bullishness has been coinciding with risk off action the last couple of years, pretty much since the start of the pandemic. As you see that red correlation between U.S. dollar and S&P 500. So essentially saying S&P 500 lower, U.S. dollar higher, and vice versa, S&P 500 bullishness, feeling good, risk on trade, U.S. dollar lower. So a number of interesting items to come here from Jackson Hole. Everybody, I think, will be looking to Jerome Powell. Other central bankers will be speaking. But like I say, a couple of different items between where U.S. rates headed, where does he see U.S. inflation risk currently, where does he see geopolitical risk, and some of the divergences between, Chinese interest rates, Chinese and Japanese interest rates, and also those economies. Is there any spillover effect there? Like I say, a lot of eyes will be on Fed Chair Powell and Jackson Hole this week.